good morning. We will pay attention to bank reconciliation today when they ask you to do the bank account and the bank reconciliation statement. So remember, they can ask it in different ways, where you have to do, for instance, the cash receipts and cash payments journal and post the entries from there to the bank account. Or they can ask it in columnar form, where you only have to show in columns what is recorded on the debit side and credit side of the bank account and what is recorded on the debit side and credit side of your bank reconciliation. Okay, so if we look at the information that's provided, the first thing that I see is that this was done by inexperienced bookkeeper. As soon as they tell you inexperienced bookkeeper, you can know that there's going to be mistakes. Okay, they give us the following reconciliation statement on the 30th of April. Now, we are doing the books for May, so we mustn't use the balances that's in this April bank recon, because we want to carry on where the bank stopped at the end of the month and where we stopped. Now, if we haven't recorded any entries in the cash receipts, cash payments journal, or in the bank, then it means that we will start with that balance in my bank account. Because they tell us here that the bank balance is 7,200. That is on the last day of May. So that means during the month, the bookkeeper already did the recordings of all the entries that happened from the 1st up to the 31st and posted it to the bank account, and then determined that the bank balance is 7,200. So I have to start with that balance because that is the balance where they stopped in my books. So in the bank account, I will start on May the 31st with the balance at the end of the month, so that I can just record the additional entries that was not done. And this balance, according to them, is 7,200. Okay, then in the bank statement, they say on the 31st of May, they have an overdraft of 10,000. That indicates to me immediately there is omissions and mistakes that must be corrected, because the two books are not the same. We should always have the same balances because we have to record the same entries. So it means I have to start with this 10,735 in my bank statement. Now, before I put in the figure, I just want to make sure that you understand the difference between the bank account and the bank reconciliation. In our books, the bank is an asset normally, and we say assets increase on the debit side and decrease on the credit side. So payments will go on the credit side and receipts will go on the debit side. Okay, in the books of the bank, they see us as a liability, because if we put money in the bank, they have to give it back to us at some stage. So they will do everything opposite of what we are doing. A liability increases on the credit side and decreases on the debit side. So they will record the receipts on the credit side and they will record the payments on the debit side. So you must just remember, if there's any entry that must be recorded in the bank recon and you're not sure whether it must be debited or credited, think how you will do it in your books, and then you will do it in the opposite side in the bank. Okay, they give me the information here, and they say the balance according to the bank statement is 10,735. It's an overdraft. A favorable balance in our books is on the debit side, so it will be on the debit side. Unfavorable in our books is on the credit side, so it means this balance will be on the debit side, 10,735. and I will show that this is the debit balance according to bank statement. Then there's a further investigation, and you discovered that the following transactions appeared on the bank statement but not in the subsidiary journal. So if it was not recorded in the subsidiary journals, it was not posted to the bank account. So it means any of the entries that the bank already recorded and we haven't recorded, we have to record in our bank account now. Because our cash receipts and cash payments was already closed off, we can't put it into the cash receipts or cash payments. We will record it directly into the bank account. And then when you record something in the bank account, you must remember that you have to say to which account will it go on the debit side. So the word that you fill in there must give you the information about your contra entry. Okay, so the first entry is bank charge 40 Rand in respect of bank charges. Bank charges is money that we have to pay out of the bank. So it means my bank will be credited and I will debit my bank charges account to create an expense. And then there's 65 Rand in respect of interest on overdraft. So because we have an overdraft, we have to pay expense, so it increases this overdraft, and I have to show that this overdraft is 65 Rand. And I will debit the interest on overdraft account. So there's another expense that we have to pay. Number B, a deposit of 700 on the 30th of April. So they show a deposit of 700. We showed a deposit of 1,000. Further investigation revealed that the deposit at the bank, according to the bank deposit slip, was 700. So that is what they received. According to the cash register roll, the deposit should have been 1,000. So we should have put 1,000 Rand into the bank. And that's why the bookkeeper showed that there's an outstanding amount of 1,000 Rand. So that you won't realize immediately that there's some fraud. It was determined that the previous bookkeeper who resigned on 30 April stole this 300. Now, you have to realize that this 300 was never in the bank. So you can't do anything in your bank recon. They recorded the correct amount that they received, 700. In our cash receipts journal, we recorded 1,000. So on the debit side of my bank, I've got too much money because I only deposited 700. So it means that I must show that the money in my bank will decrease with 300, and that would be theft of cash. And that will decrease my profits because it is a loss for the business. An EFT of 800, further investigation revealed that this EFT was not issued by Beautiful Clothing. Okay, our books are Beautiful Clothing, so the bank made a mistake putting an EFT in our books that's not supposed to be there. Okay, now first determine where did they record the EFT. They record EFTs on the debit side. So that EFT that they put on the debit side should not be there. Therefore, I will credit the 800 to indicate that they must remove the 800 so that this overdraft will decrease. And we will just indicate the incorrect EFT. So next month, we will see if they corrected this mistake. An EFT to a creditor to pay the account was recorded on the bank statement as 687. It was entered in the cash payments journal as 887. So it means we made a mistake. We have to correct it in our books. So we recorded 887. It's only supposed to be 687. So there's a mistake of 200. This was an EFT, so it was recorded on the credit side of the bank. We recorded too much on the credit side, so we have to correct that 200 on the debit side. When we made this payment, they said we made it to a creditor. So it means that when we showed the incorrect amount on the credit side, we also debited the creditor with more money than what was actually paid to him. So that means I must now show that I owe the creditor this 200 because there was a mistake. Okay, correction of an EFT of 300 in the previous month. And in the previous month, the bank made a mistake, so there was a correction of 300. We recorded it in the bank reconciliation the previous month because we've already done it and they didn't do it, or they made a mistake. So it means we mustn't record anything, and they're now recording that 300 that we said they have to do. So no entry must be recorded because both businesses have the same figure now. An EFT for 240 to a creditor on the 31st of May. So we sent the EFT, and in our books we didn't record it. So I have to show in my bank that I will pay more money out, and the account that will be debited will be creditors control. And the amount is 240 Rand. Okay, now I've recorded all the entries in my books that was not recorded or where we made mistakes according to the bank reconciliation. The following information appeared in the journals but not on the bank statement. So we recorded this already when the debtor told us that he made a direct deposit and he sent us proof of payment. We recorded it. The banks still have to record it, so they must show the 240. In their books, a direct deposit of 2290. So in their books, they show a deposit on the credit side, the 2290, and we will indicate that credit outstanding deposit. So it's an item that they still have to do. Okay, now we've recorded all the entries. So I can now add up the credit side, 7845. Then I subtract the 200 on the debit side, and I calculate what is the balance that we should have now. And that is 7645. And that balance will be brought down on the credit side on the first day of the next month. Now, what's very important is that the balance on the side that it's brought down, on that same side, it must be recorded in your bank reconciliation statement. So we will indicate here credit balance according to bank account. And that is 7645. If I add up now, the two totals should be the same. Otherwise, there's still mistakes or omissions. Okay, so remember, we calculated that the bank balance is on the credit side, so we will show the balance on the credit side. And if I add up, the total of the receipts in the books of the bank is 10,735, and the payments is 10,735, so all the mistakes was corrected. What's very important when you do the bank reconciliation, the balances must be in the same place where the balance is in the books of the bank or in our books. So if they tell you that they've got a bank overdraft, it means in their books the balance is on the debit side. So you will record the balance on the debit side. In our books, if we bring down the balance on the credit side, the balance will be on the credit side. So the entries where you have to record it in a way that the bank will do it, that's opposite to what we are doing, will always be the entries between the two balances. So EFT in our books will be on the debit side, in the bank it will be on the credit side. So here I must think, how will they record it? Outstanding deposit will be on the debit side by us, so there it will be on the credit side. Okay, why would the internal auditor investigate the bank reconciliation at the end of the month? They are doing this to prevent fraud. So they want to ensure that the balance in the books of the bank and the balance in our books are the same. Because if it's not the same, it can lead to fraud because it's easy for people to steal the money. They want to make sure that both businesses have the same entries, that the balances are the same, that if there's a difference, that we can correct all the mistakes or omissions to ensure that the books of both businesses are the same. How can they do internal control in the business? So the procedure, there must be a division of duties. The person receiving the money when receipts are issued and who receive the money at the end of the day that is taken out of all the cash tills must not be the same person that will complete the bank deposit slip and take the money to the bank. So that person must indicate according to the receipts, how much money was received, how much money was received out of the tills. Then a second person must come, check that those amounts are correct, and the second person will complete the bank deposit slip and will go and deposit the money in the bank. And they should balance their book, the money that they receive and what they deposit in the bank daily to prevent a lot of money in the business that's tempting to people to steal. Why didn't the internal audit realize that 300 was stolen on the 30th April if he followed these control measures? So now remember, on the 30th of April, the auditor saw that the previous bookkeeper said 1,000 rand must still be recorded. He didn't receive the bank statement after the bank recorded this entry. They received the bank statement afterwards. So the minute he saw the bank statement, he realized that there was a mistake. So that means that because the bookkeeper stole money, he recorded the incorrect amount on the bank reconciliation, and you can only determine that that is incorrect when you see what is the bank deposit slip according to the bank.